In case you missed it this morning, we actually are back on the board when it comes to overnight export sales activity. USDA said so this morning. Let's take a look at what we had that we can put on the tally board this time around. We had 3 sales. We had 2 of corn, 1 of soybeans. We actually had 1 sale of corn to the quote-unquote unknown destinations. And a lot of times we know where that ends up, but you never know for sure. 336,000 tons. That's several shiploads. Now, on the corn, we also had a sale to Guatemala, and it was 136,680 tons. That was a pretty significant buy for them. And in soybeans, we had a sale to China of 132,000 tons, and that would equate to basically about 2 Panamax shiploads. Well, let's take a look at our market activity as we get close to the end of our trading day today. Remember, we had the corn closing limit up yesterday on the nearby contracts, and that means we are in expanded limits today. Did we need them? No, not even close. But it has been kind of a choppy ride today. So let's take a look at this May contract, which again, I'll remind you, the options are expiring today on the May futures. The May contract now at 652 3/4 is 2 1/4 cents higher. So it's kind of doing its own little thing here. Meanwhile, we have the July contract where a lot of your volume is focused. That is 1 1/4 lower. We're at 630 1/4. And the December contract is down 4 3/4 cents right now. Make it down 3 3/4 cents at 549 1/2. So that would put us basically about 3 1/2 cents off of our earlier high of the day. So just kind of chopping around sideways right now in the corn market, at least in the intraday pattern. On the soybean trade, we have July now 1 penny lower. We're at 15.13 1/4. We've been higher, we've been lower, we've been all over the place. November soybeans down 1/2 cent at 13.37 3/4. What's the wheat market doing? Well, in Chicago, with our quotes provided by bar chart, July is down 1/4 cent at 7.10 1/4, but all the other months beyond that are higher, 1 penny or 2. In the Kansas City market, we had big upward moves yesterday, and today we're chopping around as well. July 2 3/4 higher for the moment. We're at 677 1/2. We've been as low as 668. That'll give you an idea of how wide the ranges are. And currently, July spring wheat now 7 1/4 higher at 722. Let's welcome in Brian Hoops of Midwest Market Solutions to talk about all this. Extreme choppiness heading into the weekend here, Brian. I suppose that's not to be unexpected when you get into a situation like this where maybe there's a little profit taking and that sort of thing going on.
Yeah, good afternoon, Marlon. Yeah, we've had a really outstanding week. I've got corn up about 56 cents for this week. Soybeans north of 90 cents this week alone. So, yeah, going into the weekend, it's not unexpected that you're going to see a little bit of profit taking weighing on the futures, and that seems to be what we're seeing. There's really not any dramatic changes to any of the forecasts or anything like that would suggest a major top has been put into place. But options expire on the close today, so we're getting some squaring up because of that. Margin requirements are also being increased after the close today for corn, soybeans, and for Minneapolis spring wheat. And that usually means that some of the funds will have to reallocate, rebalance some of their portfolios to accommodate for that extra increase in margin requirements, meaning they'll probably liquidate or get out of some of those positions. So we are seeing some of that effect as well today. But overall, this has been a pretty strong week for the grain markets. Be interesting to see once we start the field work and really start moving in earnest next week, if we can sustain or duplicate these gains again once producers really head out in the fields and become very active.
Yeah, can't wait to see the Commitment of Traders report when it comes out later on today. Brian, we'll come back in a moment and we'll analyze our livestock trade here on a Friday when we come back. For those of you wondering, let's take a look at a few outside markets on the equities trade on the Dow Jones Industrial Average right now. We'll go to the June futures. We're up 232 points at 33,941. Of course, some nervousness yesterday in the market based on the tax changes that are being proposed. June U.S. dollar index futures down 416 points today at 90.905, so that is somewhat significant as well. And the crude oil trade, West Texas crude now 55 cents higher on the June futures. We're at 61.98, so back under $62 a barrel there. On the live cattle market, we currently have the futures on the June down 7 cents at 115.77, but all the deferred contracts a little bit higher, as much as 52 higher in October. On the feeder cattle market over here, we have the May contract 60 higher at 137.62. All the deferreds, just like in live cattle, much stronger than what the May contract is. They're over a buck and a half higher in a couple of those contracts. Lean hog trade, well, right now you have the May contract up $1.90 at 109.35. June up $2.30 for the biggest gain. That's at 105.85 per hundredweight. So big gains there. We had the cutout values that came out on the beef and the pork, and we're talking with Brian Hoops right now with Midwest Market Solutions. Those cutout values seem to be supportive to the trade overall too, Brian.
Yeah, the cold storage report that came out yesterday, I think, was friendly, and that's kind of what the market's reacting to. We're down 7% from last month in pork supplies, 27% from last year, so that's a good number. Beef in storage also down from last year and from last month. Both of those, I think, are showing us that we have very strong demand, something we've known all along, but it's a confirmation of that for the trade, and we're getting some good short covering in the hog market as a result.
The market on the cattle, I've been watching that, and technically speaking, I mean, it's been very oversold for a while now, right?
Yeah, we've been down 8-9 days in a row, except for one bounce just a couple days ago. But I didn't think we'd see much in the way of any cash trade until we get past the cattle on feed this afternoon. The packers trying to use, if it is bearish, they're trying to use that as a way to get cattle at cheaper money. Feedlots hoping that it won't be as bad as feared, and we could see some sort of a bounce here in this cattle market, especially if they hold tight and look for higher prices. There's a lot of margins for the packers to work with.
Yeah, the live cash cattle trade yesterday was in a range of 118 to 121, so it'd be steady to maybe $2 or $3 under what we had a week ago. And the cattle on feed report comes out after the close today. We'll be watching for that. Brian, thanks for the information today. Appreciate it. We'll talk with you again real soon. Brian Hoops of Midwest Market Solutions. Tammy, I'll turn it back to you.